proof that putting crypto on your balance sheet in general is the new hot trend. Tesla Q4 Bitcoin profit highlights Bitcoin collateral opportunity. Mark-to-market gains. Tesla could use its Bitcoin as collateral to unlock liquidity and hedge against market downturns. Electric vehicle maker Tesla reported a $600 million gain from its Bitcoin holdings in the fourth quarter of 2024, thanks in part to new accounting rules that allow companies to record the market value of their digital assets. Crypto executives say the new accounting rules unlock new opportunities for companies seeking access to working capital using their digital assets as collateral. Tesla's foray into digital assets began in January of 2021 when it acquired $1.5 billion worth of Bitcoin, sparking both praise and criticism from the investment community. Although the company has since sold off more than 70% of its Bitcoin portfolio, it still holds 11,509 Bitcoin at a current value of $1.1 billion according to Arkham Intelligence. Tesla CEO Elon Musk initially claimed that he sold Bitcoin to demonstrate the asset's liquidity and bolster the company's balance sheet during periods of uncertainty. However, in doing so, Tesla missed out on billions of dollars in capital gains. With Bitcoin trading north of $97,000, the company's initial purchase of 39,474 Bitcoin would be valued at roughly $3.8 billion today, so nearly a 3x from where it is right now. Tesla's Bitcoin purchase came 3 years before new accounting rules made it easier for corporations to hold cryptocurrencies on their balance sheet. In December of 2023, the U.S. Financial Accounting Standards, FASB, finalized rules that would allow corporations to reflect crypto assets' fair value or estimated market value on their books. Now, obviously, this is huge for miners in general, too, because a lot of the mining companies weren't able to reflect that necessarily. They had to realize those gains to a certain extent, or, basically use that to pay because they couldn't leverage that as collateral. And now it's going to be a lot easier for these large cryptocurrency mining companies to grow. And that can be essentially a double-edged sword. I've talked about this a lot, but the further and further we get into the adoption of cryptocurrency, the more and more we lose that capability of the average Joe being able to bring themselves up from the ditch. That doesn't mean all the opportunity is gone. It just means that it's going to get exceedingly more difficult. And as we talked about in the altcoin market, where a lot of people turn when they want to build themselves up, basically their net worth within cryptocurrency, what you could do over the past cycles is, play in the altcoins and have those potential 1000Xs due to the sheer number of amount of cryptocurrencies now available. The likelihood and chance of that is turning into a gamble more and more. And so you have to start thinking about this as you're participating within cryptocurrency. So before 2025, the rules required companies to carry Bitcoin at its lowest historical price, obscuring unrealized gains. Under the new guidelines, digital assets can be marked to market, accurately reflecting fair value and dispelling the notion that Bitcoin is a dead asset on the books. Essentially, fair accounting rules enable Bitcoin to be treated as an asset in a manner that reflects its market value at any given time. The transparency and predictability of this make it far easier for corporations to hold Bitcoin on their balance sheets, says John Glover, Chief Investment Officer of Ledn, who told CoinGraph this. So it allows companies to maintain their exposure to Bitcoin's appreciation while accessing immediate liquidity to invest in stocks, bonds, and other financial instruments to generate returns on reserves. Glover also said that the approval of spot Bitcoin exchange traded funds has legitimized Bitcoin as a treasury asset. Bitcoin holdings typically generate yields in the 3 to 4% range, with some corporate treasuries actively lending to crypto firms to meet rising borrowing demand, he said. The US spot Bitcoin ETFs have amassed nearly 116 billion in total assets, according to CoinGlass. ARK Invest called the Bitcoin funds the most successful ETF launch in history. Now, I do have this question as well. Do you guys have in your 401k a Bitcoin ETF option? If so, have you managed that 401k and moved a portion of it into Bitcoin? I'd like to hear if that's something you guys are doing. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.